Hello traders, this is a quick update for yesterday's market recap and what's happening now for March 9th, Thursday. So I did not do a daily analysis yesterday because I was away, and really, the market, generally speaking, was very quiet ahead of today's ECB conference, and that's why I didn't really trade any risk events, nor did I have any new daily trade that I'm interested to enter. And my previous pending order, two of them got filled, and of course my Euro Newsy finally got stopped out. And let's just get into it because I don't have any sheet right now. I will just pull up the calendar and explain what happened. So basically, Wednesday, don't really have anything that is tradable. You have annual budget release. I haven't even looked at this, to be honest with you, because there's few reasons. Because this event is important for UK, but not for this month, as all eyes are on the Brexit bill right now, which is still in the parliament, and that really will be the headline for March until they trigger the Article 50, which will be the main catalyst for British pound, basically. So really right now, all the fundamental data basically will be sort of ignored. And on top of that, as I mentioned, the past fundamental data, the recent fundamental data from UK had not been that positive. Now, remember back in 2016, the only reason that the British pound was still, also, they dropped about almost 20%, but the whole UK economy was still quite resilient. And that's because the fundamental data, especially the consumptions, retails, GDPs, everything was still doing very well. However, that was not the case recently, and that's what gets people start worry, and then it seems like they are going downhill. So that would be the main catalyst, other than anything else. Yesterday, the non-farm employment change (ADP) came out really positive. Now, this I did trade as an intraday trade, but I didn't have any opportunity. The reason is because dollar had already been bought off. So basically, the catalyst has already been priced in. So really not much to do for me in an intraday perspective. My swing trade dollar, of course, are still all in play. And this is, of course, is a good sign because ADP is generally like a prediction for non-farm payroll. And if you take a look at non-farm payroll this week, you do expect a higher hourly earning, a little bit lower employment change, and a lower unemployment rate. So kind of a mix, but generally speaking, better because wages is what people are looking at this point. Pretty much for job data, from non-farm payroll, even the ADP, the jobs are data-wise, job number-wise are has been very good. So really, the wages is the thing to push the inflation even higher. So that will be the main focus for people. Now, yesterday, the biggest event is the oil market because the crude oil inventory, we have another large build-up. Now, it's not the largest build-up we have because back then you have this kind of 13.8, 9.5. But what happened is that how much can OPEC or the oil market tolerate it? Because back then, let me pull out the oil chart. Because what happened is that back then you have consecutive of build-up, but it does not reflect in the Canadian dollar or the WTI, and then when it's not reflecting, there must be some other forces, and that was the OPEC was basically holding that up well. But that's why you have this kind of nice daily short-term uptrend back then, and it dropped yesterday significantly. Not only that, it actually broke below 50. Yesterday the 50 was still holding well. Today it seems like we continue to go lower right now. So this is significant when oil broke down $50 per barrel. So really, as I mentioned before, oil market is a battle between OPEC and the U.S. shale producers. Now, OPEC is not going to let the shale producer just keep taking advantage. So, another thing is that this kind of supply curve, as mentioned, is done artificially. So when things are done artificially, you have to ask yourself, how long can this effect extend it? And if it's within a single entity, then it's much easier to control. For example, if Federal Reserve or ECB or Bank of Japan decide to have a QE, then they have more control because it's within one country, or within Euro, they give ECB the absolute power to control the monetary policy. For OPEC, on the other hand, it does not work that way because it requires everybody, different members to cooperate, and there is no governing body in this kind of oil curve. That means that people are actually free to cheat. And that was really the biggest worry last year, even when they reached the agreement. So this year, January, February, and March, and OPEC were doing very well. They are still doing very well. But, when you have this kind of battling force from the U.S. shale producers, then really how that's going to affect the general oil market is a big question mark for a lot of people. So from data-wise, of course, the shale build up for the consecutive 8 times already. So this is not looking well, and right now you have an effect already from the oil market. So if today we close below 50, we'll see how we end up today. But if we close below 50, that is a significant bearish power for oil market. Other than that, let's keep saying. So another thing is the CPI data from China. So it was a large drop, as you can see, lower than expected, lower than the previous. And if we pull down, it's really, really a big miss. Now, the only good positive side from that is the PPI, which is, again, better than previous and better than expected. And if we pull down, it's really the best from the past few times. So why is it going like this? Well, generally speaking, the Chinese economy continued to grow. The demand continued to go higher, especially in the mining industry. So all this playing a very good effect for the overall economy. However, the CPI is lower because the consumption is not high enough. And especially they just had a lunar year, so they were saying that the food price was not high enough. But because of the high PPI, this is not that worry. It's not that a big worry sign. It's because eventually the PPI will transfer into the CPI. That means that if the producer has to pay the higher price for goods and services, eventually they will transfer that to the products, which will be the cost for the consumer. So PPI should be a leading factor for CPI, generally speaking. And that's why not really a big worry sign, but for short term, of course, it's dragging down a lot of the commodity currencies, including Canadian dollar, New Zealand dollar, and Australian dollar. So that was the big, that was a fact from yesterday after the Asian session. So pretty much that's what happened yesterday. Today, of course, London session was still quiet, everything quiet until we have the ECB conference, which I just traded through. And the event, not much surprise. Now, when you're trading the risk events, you always want to know, first of all, what was the general consumption, what was the general belief, and then you want to only trade when there's a surprise. So that means when there is a result that go against that belief. If you have a result that is exactly match the belief, then you have to see whether the market has already priced in. And if it has priced in, then really you have no trade, especially for intraday perspective. And that's the way I trade it. So prior to the ECB conference, the trader were expected a less dovish ECB, and the reason is because the inflation, especially the headline inflation, has hit 2%, which is the ECB target. So they were hoping that in the minimum bid rate, the statement itself will remove certain lines. And when the statement came out, that was not the case. However, not much movement because people were already waiting for the conference. And the conference, however, which I just traded through, it was much less dovish, of course. And the Draghi, the president of ECB, did mention that things are looking better right now. Of course, accompanied by the data wise. So they didn't say they will stop QE. They also didn't say they will start tapering, but they say that basically the downside risk has been limited, and they back then, basically, I'm rephrasing it because I didn't have any sheet in front of me, but basically they're saying that back then they say they will still use a lot of tools to stimulate the market, but right now that necessity has decreased. They probably they don't really need to do that anymore because the market has picked up quite well. But for that being said, doesn't mean they will start raising the rate. That doesn't mean they will stop the QE. That's all still too early to say. So what happened? What does that mean is that it does basically fulfill what the traders' expectation are. Because of that, it's not a tradable event because there's no surprise anymore. Now I did took a trade because there was a little bit surprise from the statement itself, and which is only like 45 minutes away from the statement itself to the press conference itself. And that initial surprise, of course, you can make 10, 20, 30 pips depend on what had happened in the market. So what happened to euro is that euro had been largely bought off all through this week. That's why you are really buying at a very, very high point, very little room to go even higher before it pulls down. So that's what happened. And basically that's it for today, to be honest with you. Right now we are about 10 o'clock Eastern Standard Time morning. Really nothing much going on. And tomorrow, of course, the big events will be the non-farm payroll, which is more exciting to trade. But for Thursday, that's pretty much it. I'm still going to come back later on Pride London to give you maybe another update. So I just traded through ECB, took a euro pound trade. Really not much going on here, just 10-20 pips. Again, got in at the press conference at pretty much the end of this candle, right up at 87, and then just get out at the end of the day. And the reason is mentioned, we're really at the high of daily pivot already, but more than that, you are way above 100-day moving average. But more than all this is that if you're looking at the daily chart of euro, everything is going, euro pound, everything is going very, very high, except euro dollar, which is still in a downtrend. But if you're looking at like euro Aussie, or even looking at euro New Zealand, is the one that we lost. You see, this is huge uptrend. Even euro yen today, it's huge uptrend. Now this, let's see if this come from the ECB or prior to the ECB. So that was mainly from this ECB events and prior to the ECB event. So it has been, and from here as well. So has been going up, and then went up again. So really, pretty much everything is hitting a daily pivot. Now, when you use a daily pivot, it does not mean it has to stop here. This is something, a big misconception for a lot of people. Basically, all the technical tool you use is just a guidance, right? It's not a miracle. It doesn't mean it's going to work 100% of time. It doesn't mean it's going to direct the market. It just gives you a probability, a guidance. It doesn't, when you're approaching 200-day moving average, people say, oh, that's a significant resistance or support. It doesn't mean this price will stop there. It just means that's a guidance for you to use. So that's something you have to keep in mind. So of course, this price can keep going higher, and I have no problem with that. It's just saying that right now you are at a very high daily range. If you're looking to scalp, it probably will be better off to buy at a lower area. So that's why I got out of my trade. I'm really not looking to enter anymore because I don't find there is any good surprise. As I mentioned, pretty much the ECB has fulfilled what a lot of market participation wants to hear. So that's what happened. Now for my daily trade, of course, just give me 1 second. Euro NewZ, biggest loser, and really lesson for me is of course I mentioned before, always buy when you have a much hawkish central bank versus a much dovish one, and this trade is really a completely wrong trade to take. The reason is because right now the ECB is even more hawkish than RBNZ, and that's really number one criteria. Now although from the yield perspective, NewZ still has a higher yield than euro. From the bond perspective, 10 years bond, New Zealand of course still have 3% something, even a lot higher than the euro. But regardless, when you trade in a spot forex, it's really react more quickly, and that's why it has more money to be made, of course. But that's what happened. I did not pick a pair in the right directions. On top of that, technically speaking, I was too early. So although this is all good resistance area, there was really no price action to reject this kind of level, meaning there's no candlesticks to show a reversal at all. So I basically put a pending order and just got feel and all the way raised up, and that's just non-stop 1, 2, 3, 4, 5, 6 and even 7 days of higher high and consecutively. So and of course the third thing is that NewZ unfortunately is very, very weak because of the risk of sentiment right now. So this one is done, and my other trade, euro dollar, is still in now. Not really too worried about this one. The reason is because dollar is still very attractive for a lot of people, but right now maybe euro is less bearish in this point. I will still hold it, but mainly because the strength of US dollar. Otherwise, I would say from today's press conference, it's confirmed that right now the central bank for euro is probably more a neutral one compared to before. Of course, for US dollar, it's a very hawkish one. That's why you still has this strength versus weakness. But perhaps, if you want to buy dollar, it will be much better to pair up with other currency. And my Aussie Swiss got stopped out from this entry, and really no surprise for me, to be honest. It's just really I did not get a chance to get out here. I'm basically like 1 pips away from break even, so this is a bummer for me. Got stopped out. I actually re-enter at 76.50 at a completely new position. That was before today's this drop. It was here. Now it was a pending order, got feel. Basically, I like this level because it was holding up well, and you do have some candlestick rejection. Unfortunately, we did close lower than this, so right now it's not a good sign. But my stop loss is still way below here at 75.50. So we'll see what happens. I am still quite confident for Australian dollar. We do have 1 support, 2 support, and 3 support. So we'll see how this thing holding up. Another thing I got in is Aussie yen at 86. Now this is much better. Again, got in same thing. You have price rejection here, and now this 86 seems to be holding well. Same thing. We'll see how this thing play out. Other than that, everything else is still the same. Dollar yen still in, still trying to touch 115. Dollar Swiss is still in also, and just let me double confirm, see what else I have. I think that's pretty much all my daily trade right now. And yes, that's, oh yeah, sorry, cable. Yes, cable is another one. I'm still in, still waiting to touch 2-0. We might get there, we might not get there. We are quite far away from all the moving average, of course. So we'll see what happened. But in a fundamental perspective, this is very good trade to be in. Other than that, let me take a look at what happened. So because of the ECB right now, I am actually looking to buy euro versus other weak currencies such as euro pound. Now for euro pound, of course, I think we are right at a high level right now. Really not interesting to buy at this breakout. So, but if we come down to 86 or even 85.50, I think will be quite attractive level. Question is whether we can come down there or not. Euro Swiss might also be a good pair to buy. Good thing about Euro Swiss or even Euro Yen is that sometimes they both are considered safe haven currencies, so it might not be bad to pair up this kind of pair. But Euro Swiss right now basically right now Euro, I think it's a neutral currency from the central bank's perspective. We are still at a very low rate, of course, so that's why you don't want to pair up with something that is really, like for Euro New Zealand, I understand this kind of huge movement, but for me, in all honesty, even if we are here back then, it's still not a currency I will like to get in. It's still not a pair I would choose, and the reason is because I just don't think I have enough strength versus weakness from the fundamental perspective. So this is not something, and that's something I will definitely always miss out in compare with people who just trade technically, and that's just the thing. You will miss out winner, but you also avoid some losers. And of course, this kind of trade for me, it's just not a trade that I will take regardless of the result. It's just because fundamentally speaking, I just don't have enough differences in these two currencies. So even for now, I still wouldn't really trade Euro New Zealand, Euro Aussie. I will trade Euro CAD. Euro CAD will be much better. The reason is because what happened to Euro New Zealand is that the central bank is quite dovish, but they did not say they are looking to cut interest rate. But for Euro CAD, the Bank of Canada did say that the rate cut is still on the table, and there's a lot of downside risk from Canada as well. So Euro CAD, if I have to choose a commodity currency to trade, CAD will be the only one. And of course, we are again at a very high level right now, so not something I would do anything about. Now, I also have to mention that's only because after today's press conference. Otherwise, back then, if you say, hey, there's a nice candlestick, but it's still not something I would take. It's because back then the central bank of European Central Bank is still quite dovish. It only really confirmed about their stance for today. And Euro Yen will be something also nice to trade, and you actually just cross over all the moving average, so might not be bad, but I'm just trying to see how high this thing. Oh, you still have a lot of level to go. So Euro Yen will actually not be bad to trade at a nice level. Right now we are a little bit consolidated here. We'll see what happened today after today's close. And I think 121 or 120.50 might be a good level to buy for euro yen. So that's that. Pound Swiss, not something I'm looking to do. Pound dollar cable really already in. Still looking to show Pound Aussie. I'm still waiting for it to go a much higher level. Not 62.50. I think it's just too close. Maybe at least 64 and 65. Other than that, I'm not looking to do anything. Pound CAD or Pound New Zealand, not looking to trade. Now this one, I'm really glad I got out a couple days ago, just because I realized, realized basically for the new learning for myself is that, really you don't want to go against central bank, or you don't want to pick something that does not have a huge difference. So I got out. Otherwise, this will be another loser for me. So Pound Yen, also not looking to do anything about it. Same as Swiss franc, Japanese yen, dollar Swiss, dollar yen, as we already mentioned. Now dollar CAD shoots up again, and right now the next zone, of course, you're looking at this higher 36, which is also 100 pips away. Very easy to hit. The daily average true range is only about 95, so it's very, no surprise if we hit there in the next couple of days. And of course, technically speaking, hitting a strong resistance, you should have some pullback. But CAD is just really, really weak right now, so it could break above it. The CAD. Let's keep going. Aussie Swiss is the one we are in right now. Aussie dollar dropped. Now the Aussie dropped, of course, from the negative CPI from China. Aussie CAD, I'm actually looking to get in if we can have something at 1.0 here. 1.01. I think Aussie New Zealand. Let's see. Don't know what happened to Aussie New Zealand. Okay, a little bit pullback, nothing too significant. Not really looking to do anything until we can reach here. Of course, it takes patience. It's like 150 pips. It's really easy to, not hard to drop here. Because when you look at a chart, something you feel like, wow, this kind of thing will never pull back, which is actually not the case. If you zoom out, price will always go ups and down, ups and down. That's Aussie New Zealand. Aussie yen also looking. Oh yeah, this one we are low in this one right now. And CAD Swiss, CAD yen, basically not looking to get into a CAD trade. And this is what I'm saying back then. Yes, you are at a very nice 200-day moving average, weekly support, but because of the negative stance from Bank of Canada, not something I will buy. On top of that, the oil market yesterday from crude oil built, and all this play into a negative effect for Canadian dollar. New Zealand also something I try to avoid. It's just huge drop for New Zealand. Same as New Zealand. New Zealand cash should be better. A little bit support. New Zealand, and of course the worst is New Zealand dollar, which continue to go lower. Now it does look like we're gonna touch 68, 75 very, very soon. Only 20 pips away, so we'll see what happens. So this was a huge drop also from 72, basically from 72 area all the way down to 69. About 300 pips. So quite significant for this pair because the daily range is really just less than 100 pips. And that's definitely has a lot of more room to go, especially if Federal Reserve continue to be hawkish. Then you will expect to see a polarizing effect in these pairs. So that's pretty much it. I don't really have any new updates other than my Euro New Zealand got stopped about, got filled at another 2 Aussie trade. And that's pretty much it for now. Tomorrow will be the non-farm payroll, which is tradable for a intraday perspective. Again, what you want, for me personally, you don't have to trade my style, but for me, if I gonna trade a risk event, always looking for a surprise. That means if if the number is, first of all, I'm always looking for a congruent result. That means for example, last non-farm payroll I did not trade. Oh, actually I did trade and I got out because that was a mistake. But I shouldn't trade, and you should not trade in that last one, is because it was a mixed result. So what you want to see is, of course, a better non-farm employment change, a better average hourly, and a better unemployment rate. So this is something that I look out first, is that a congruent result. Then I want at least one of them to be a surprise. So first of all, you want all positive data, all better than expected. Then you want one of them to be a surprise. If that's the case, you can't trade and you will have a much better result. Now I will give you the number later today at the Pri-London analysis. Other than that, Canadian, this is not something I'm looking to trade. It's because you could sell it actually. I'm probably not gonna buy. Well, depend on the daily range. But what you can do is, if you pair dollar CAD, if you have a better dollar negative CAD, then you can trade. The problem is that you gotta look at 5 data all at the same time, and sometimes it's very hard to do. For me personally, I'm probably getting old or something, but it's just not, I'm not that fast anymore. So for me to look at 5 data right away, digest it, and take a trade, it's just, I don't, I will never be as fast as those computers. So for me, I tend not to pair up with that. I tend to pair dollar with something else, and I tend to pair CAD with something else. Now for CAD, I'm only looking to short. For dollar, I'm only looking to long. For CAD, I'm only looking to short. Actually, I rephrase that. For dollar, we might looking to sell if we have a very negative result, but that's only if we have a very negative result. You can sell against euro or Australian dollar, but it's not a high conviction trade. So for me, the best one is just looking to long US dollar. For CAD, only looking to short. So for CAD, same thing. If I want to short, I want to have a negative number in both unemployment rate and employment change, and one of them has to be a surprise. Now for CAD, for some reason, I don't have the forecast. If I don't have the forecast, it's not really tradable for me. Let's see. Sometimes it come out, very, very last minute. So we'll check back tonight and see what happened. But as for now, that's my game plan for tomorrow. And of course, manufacturing production, I know it's red, but it's really not something I focus too much on. It's because manufacturing not that big deal compared to service industry for UK, but you can still trade it. Of course, for me, I will always only take a short trade for pound nowadays. Other than that, again, today I don't have anything else. Basically, almost at London closing. So that's pretty much it. And Euro pound again, we went up, trying to touch. If you take out all the euro trade, really at the high level already. So same as euro yen, same as euro dollar. So you pretty much should have a reversal right now. And that's pretty much that. That's why I say I don't really have anything going. Again, it could keep going higher, no doubt about that. But for me, not something that's too surprised to trade anymore. So I think that's it. A quick recap. Apologize, there's no sheet for today. Other than that, I will be back in the next Pri-London opening. Okay, thanks for watching. I will see you very soon. Thank you. Bye bye.